AI stocks did not just get another earnings headline, they got a stress test. Micron came out and reminded Wall Street that the artificial intelligence boom still has real demand behind it, especially in memory chips, where supply is tight and customers are still willing to commit serious money. But at almost the same time, Cerebras showed the other side of the story. Investors are no longer willing to buy every company just because it has an AI label attached to it. That is why today's market is more interesting than a simple "AI is back" headline. Micron's results gave investors a reason to believe that the AI infrastructure cycle is still alive, because data centers need memory, bandwidth, and real hardware before any AI dream can become a business. When a company shows demand, pricing power, and customer commitments, the market listens. But when another AI name shows pressure on margins, the market starts asking a much colder question. Where is the profit? This is the split that matters for investors at lunch today. The AI trade is not dead, but it is becoming more selective. In the first phase of the boom, almost anything connected to AI could attract attention, capital, and a premium valuation. Now Wall Street is starting to separate the companies selling essential infrastructure from the companies still selling a promise. For the calm metrics, this is the key message. Price is the surface, but liquidity and conviction are the real story underneath. Micron is not just moving because people like chips. It is moving because investors can see a direct link between AI demand and revenue. Cerebras, on the other hand, reminds the market that a powerful story is not enough when margins start to disappoint. The market is not rejecting AI, but it is rejecting weak evidence. The macro backdrop makes this even more important. Oil has cooled from the panic levels, which gives the market some relief on inflation pressure, but the dollar, yields, and the next inflation data still matter. If inflation stays sticky or rate expectations move higher again, risk assets can quickly lose momentum, even when the AI narrative looks strong. That is why Bitcoin, tech stocks, and AI names are all trading inside the same bigger question. Is liquidity improving, or is this just another bounce? So the real story is not whether AI is hype or not hype. The real story is that the easy phase of the AI trade may be over. Investors are still willing to reward real demand, real scarcity, and real pricing power. But they are getting much more aggressive about punishing weak margins and expensive promises. And that means the next move in AI stocks may not come from the loudest headline, but from the companies that can prove the boom is turning into cash flow. This is why Micron matters beyond one earnings report. It gives the bulls evidence that the AI build-out is still consuming real chips, real memory, and real capital. But Cerebras matters too, because it tells us that Wall Street is no longer blindly buying the entire AI basket. In this market, the question is not, do you have an AI story? The question is, can your AI story survive the numbers? That is the lunch hour takeaway from the calm metrics. AI is still one of the strongest forces in the market, but the trade is splitting into winners and warnings. Watch Micron, Nvidia, the Semiconductor ETF, Treasury yields, the dollar, and Bitcoin together, because they are all part of the same risk map. If AI leadership holds while macro pressure cools, the rally can keep breathing, but if margins and liquidity start to crack at the same time, the market may become much less forgiving.